This is Marie Conser, a real estate broker in Portland, Oregon with John L. Scott. And in today's episode, we're talking about what a lender wants to see in order to pre-approve you. So today, my guest is Tim McBratney, Pacific Residential Mortgage. Hi, Tim.
Hey, Marie, how are you? Nice to see you. Again, Tim McBratney with Pacific Residential Mortgage. Nice to talk to you.
Great. So Tim, first of all, can you tell us the difference between being pre-qualified and pre-approved? I know in our world, some people use those words interchangeably, but they definitely mean something different. Can you speak to it?
Absolutely, that's a great question. At pre-qualification, typically somebody will call me, we'll chat over the phone about their job and income and so forth. But until it is verified and confirmed in writing, it is not a pre-approval. And if you are looking to buy a home, then any listing agent or home seller is absolutely going to want to know that you have your income and asset and credit information has been documented, fully documented and viewed by the lender. So that's really important.
Okay. So in one case, it's a case of if you're not lying to me. And in another case is you have proven to me that you're not lying to me.
That's about it in a nutshell.
Okay, we are all working with trustworthy clients, so that's the good news. However, from a seller standpoint, and I want to be the voice of the seller here for a minute.
Yeah.
When a seller receives an offer to purchase their home, the financing is going to be very important because they want to understand how you are going to purchase this house. Mm-hmm. So if it's an all cash offer, they will ask for a proof of funds. Do not get offended. They just want to show that they are going to take their home off the market in order to work with somebody who has the financial means to bring it to the closing table. And think about it as a seller, you would want to do exactly the same. So if the buyer, which is the majority of our transactions, does not have enough cash to pay in cash, then they will be using financing, and the type of financing is important. Conventional, FHA, VA, etc. will matter to the seller, as well as how much down payment you will bring, and if you actually have gone through the process of pre-approval. So Tim, what kind of documents do you actually require to take a look at the buyer and pre-approve them?
Absolutely, great question. So we want to make sure that you have sufficient income to service or pay your mortgage payment every month. And we also want to make sure that you don't have too much debt. You know, we have car collectors and guys that go a little crazy with their Visa cards and have, 10 or 12 of them, and that can be a concern to a lender. So the first thing that we do is we check your income. And the way to do that for us is copies of your tax returns for the past year or two, copies of your most current pay stub. So we do look at current income. I have, many clients say, yeah, but 5 years ago I earned, $80,000 a year, and that's wonderful, but we're concerned about your ability to pay now. So tax returns, W-2s, and pay stubs to determine your income. We also want to make sure that you have sufficient assets to close on the property to pay your down payment and closing costs. So whether it's 3 to 5% down or 10 or 20, we do want to look at your bank statements to verify that you have the assets. We just document everything. And then, of course, naturally, we do want to pull a credit report to make sure that you have a satisfactory credit score. And again, don't be dismayed. If you're concerned about your credit score, let us still run a credit check and see if we can get you on a path to improving those scores. Oftentimes, we have some tricks or methods that we can do to get your score up in relatively short order. So,
okay. Great. So I have a few questions here from what you just said. First of all, tax returns. I understand the IRS this year. We are at the time of this video, we are in the global pandemic of COVID-19, and things I think have been delayed. Don't people have more time to file their tax returns? How do you handle this?
That's a really good question. So we are okay if it is 2017 and 2018 tax returns. Typically, people will still have their W-2 for 2019. We would like to get a copy of that as well, but we do not expect that you supply us with your 2019 returns just yet. So you're okay.
Okay, good to know. What about a loan application? Do you have to complete one or at least fill one out in order for the credit report to be pulled?
Yeah, no, that's a great question. Thank you for holding me accountable on that. So before I can run your credit,
Anytime, Tim,
I do need
anytime.
to have a completed application. So what's really fabulous about, especially during COVID, where face-to-face meetings are discouraged, we have an online system through our website where you can complete an application. So we do an awful lot remotely now and over the internet. So application first, thank you. Verification second. So thank you for that.
Okay, no problem. What if I can give you my credit score from Credit Karma, or maybe I have a Discover card and it gives me my credit score? Can you use that?
No, it's a great starting point though. So it tells us where you are at in the immediate. However, we do have to pull our own credit report. And we typically, lenders in general, will typically use a different model. It's a mortgage model, perhaps a little bit more strict than a consumer model that you're getting from Credit Karma. So it is important that we pull a credit report, and we do look at all three repositories, including Equifax, Experian, and TransUnion.
Okay. And I have to assume that it's not just the credit score that you're looking at when you pull the credit, it's also all the lines that are being open, which I'm assuming is also an opportunity for that buyer to identify a potential error or fraud or ID theft. Unfortunately, it is frequent. It just happened to my husband recently. Mm-hmm. So if those lines exist and are not theirs, this is a good time to actually catch it, rather than being under contract and seeing it as you're in the final phases of wrapping up your purchase, correct?
Oh, without question. I think that's why it's so important to get started early. Oftentimes we may discover some issues on a credit report. You and I have a client that we've been working with over the past couple of years that was surprised by some credit incidences, and she's working on getting that rectified so that she's in a really solid position to buy. And we hope that will be coming up shortly.
Yes. So in an episode that you and I have, we talk about fixing credit issues and how you can assist, or other professionals can assist. So we can link this video to in the comments here. But yes, it's very important to do this homework beforehand, because we definitely do not want, and I'm talking as a realtor here, if you do not have that pre-approval letter, if you have not done that exercise of checking out what you can afford, there are actually a myriad of reasons why I want this to happen before we start shopping. And I have that another video for this. But the bottom line is, you do not want to find an error that will take weeks to fix.
Indeed.
When you are in the underwriting phase. It can be heartbreaking.
Absolutely. You bet.
All right.
And one last thing to add, if you are concerned about having sufficient assets to close, we do allow gifts from a family member. So we would document that with them. You can borrow on a secured basis. So if you own your brand new car free and clear, then we could look at allowing you to borrow against that vehicle or some secured asset. So there are ways around it. Again, don't be discouraged. Give us a call. Let's see if we can figure out a way to get you to your goal of buying a home.
Great points. And a word of advice for people who are listening to this video and think, great, I'm going to have mom and dad send me $10,000 so it can complement my down payment. Please, before you put any money on your bank account, talk to your lender. Talk to your lender. All the money has to be documented and understood. There's some very specific regulations surrounding movements of cash. So if you've been sleeping on a mattress of bills, for example, do not start bringing them all to the bank overnight. Talk to your lender, right? Tim, you can provide an explanation about what an underwriter will need to see, and you will guide people in order to make that money come to benefit them. It's important not to do that on your own, guys. So Tim, do you want to add one more thing, or you're good?
Yeah, I'll add two things if I may.
Sure.
Number one is Marie hinted at an underwriter. So while I gather your pay stubs, W-2s, and bank statements and run credit, it's still going to be reviewed by an underwriter. It's really important then that you work with an experienced loan officer that knows what to look for. They know what an underwriter wants to see. So that's really critical. Lastly, when you are under contract, when you find a home that you've fallen in love with and you write an offer on it, then we are also going to verify that property. We're looking primarily at the value of that collateral, because that is security for your loan. But we'll look to see if the appraiser conditions for maybe some repairs or roof inspection or things like that. So it's kind of a second set of eyes for you. We always recommend a home inspection, but the appraisal is also done on our end to verify the collateral.
Okay, very, very good point you're making. And on that note, that is why it's called a pre-approval. The underwriter is going to give the full-on approval, but that can only happen once you're under contract, like he mentioned, with a collateral to secure the loan. Absolutely. So thank you so much, Tim, and I will talk to you later.
Okay, nice to see you.
Bye. Bye-bye.